Hi, I'm Michael Yardney, and only a few days ago, a reporter from a major daily newspaper asked me what I thought of the latest doomsayer economists who were predicting the property market was going to crash. Now, I think I shocked him when I said, well, he's right. Our property markets will crash. But then I went on to say, but not in the next few years, and not by the predicted 30 or 40%. Now, I'm going to explain this in a bit more detail, but I just want to let you know that this property market update is being brought to you by my annual Real World Real Estate Workshop. This is Australia's longest running advanced property workshop, and if you're interested in getting involved in property development or property renovation, and it's a great strategy for this stage of the cycle, click on the link at the bottom of this to find out all about my workshop. So let's take a look at the most likely scenario for the property markets over the next few years, and what factors will cause this property cycle to end. And as a property investor, what you and I should do about it. You see, property booms occur because demand outstrips supply. And that's been happening for the last couple of years with strong population growth and an undersupply of property. But eventually one of four factors tends to bring each property cycle to a halt. And these are, number one, a recession. And nobody thinks that that's going to be likely in Australia over the next few years. Number two, high unemployment. When homeowners just can't afford to keep their mortgage repayments. Again, I think that you'd agree that this is really unlikely, high unemployment over the next few years. Number three, an oversupply of property. That could bring it to a halt, couldn't it? But with a housing shortage, this is really unlikely to be the catalyst of this particular property downturn. Now, having said that, I'm concerned about the number of inner city high-rise apartments that are coming on stream, particularly in Melbourne and Brisbane in 2012. So I'd totally avoid the inner city high-rise off the plan market. Now, the fourth thing that could bring this property cycle to a halt, I guess any property cycle to a halt, is high interest rates. Now, this is the most likely factor that's going to affect this cycle. So the question savvy property investors are asking is, well, how high will interest rates go? How high will that need to go to stifle this market? When will it occur? And what should I do about it? The simple answer is that interest rates of about 9%, which would equate to a Reserve Bank cash rate of maybe 6.5%, would most likely stop property investors and homeowners in their tracks. Now, way back in the past, interest rates of 20% in the 1990s created the property slump, but that was when inflation was much higher. So today, interest rates of 9% will have much the same effect as those much higher rates when inflation was rampant in the 80s and 90s. Okay, so when will this occur? Now, according to a recently released BIS Shrapnel long-term forecast, they believe Australia's economy is going to rebound, and inflationary pressures will force mortgage interest rates above 9%, maybe in the next 3 years or so. The economic forecasters predict that our economy is going to grow. It's going to accelerate to maybe 3.8% annually between now and 2013. And that means our unemployment rate is going to drop. And BIS Shrapnel economic forecaster Richard Robinson explained that the tightening of the labour markets and the increase in household spending is going to lead to a higher CPI. This in turn is going to prompt the Reserve Bank to raise interest rates, and he thinks they're going to reach around that 9%, probably in about 3 years' time. In the BIS Shrapnel report, Robinson explains we still have a number of critical policy issues that need to be addressed. And these include the serious housing shortage, ongoing infrastructure deficiencies, the bottlenecks of development, and of course a skills shortage. He says that these issues are going to lead to inflationary pressures which will almost certainly result in higher interest rates. Now, the good news is that property investors and homeowners can expect the value of their properties to surge over the next few years as our economy flourishes, as wages go up, as inflation increases. Robinson says that current undersupply of housing is not likely to be addressed, given that mortgage rates are now around neutral levels. And what this means is we're going to have huge pent-up demands, strong rents, rising income, and an easing in funding for property developers. So this is going to sustain the recovery over the next 2 or 3 years. So our property markets are going to do well for 2 or 3 years. But what's going to happen then? Will the property markets crash? Look, I don't think so. In Australia, excess in housing prices are usually corrected by house prices remaining flat for a while, rather than values really crashing. It's unlikely that we're going to be in a recession. We're not going to have rampant unemployment. Our housing markets won't be under supply. So what's going to stop this cycle are high interest rates. And that's going to make houses unaffordable for would-be homeowners and will stop investors getting into the market. Robinson also predicts that house markets will enter a controlled downturn by about 2014, once those high interest rates take hold. He thinks that labour shortages and a synchronisation of construction cycles will lead to a build-up of inflationary pressures, and the Reserve Bank will respond. Now, this is just the way previous property cycles have behaved. There's nothing new with this. So the take-home message for today is there's a window of opportunity, but it's closing. So take advantage of the current property cycle and be prepared for the inevitable downturn in 2 or 3 or 4 years. But of course, between now and then, you just can't buy any property and hope it does well. Some properties are going to outperform others over the next couple of years. In particular, those properties close to infrastructure, close to the CBD, close to water, close to amenities, lifestyle, all those things that will significantly increase the value of those properties compared to those in outer areas, which will still be hurting by relatively high interest rates and unaffordability. Now, one way sophisticated investors are going to take advantage of the current property markets is to manufacture their own capital growth by getting involved in property renovations or property developments. Now, if you join me at my annual Real World Real Estate Workshop in October, you'll be able to discover proven systems and strategies for profitable property investment. Gee, lots of P's there, it's hard for me to say. Proven strategies for property investment that's going to allow you to take advantage of the window of opportunity between now and when our property markets eventually turn down. Now, just to make things clear, this is an advanced property workshop that I conduct only once a year. And it's Australia's longest running 3-day property workshop where you can learn the art of property development and property renovations from some of Australia's most respected experts. And you know what? Your satisfaction is guaranteed by my personal money-back guarantee. So when you come, you're going to learn what I call real-world answers to the real problems faced by investors in today's changing markets, and real-world property renovation and development strategies. So if you want to get started in property renovations or development, please join us. Now, there's no get-rich-quick schemes, no pie-in-the-sky concepts from people who've only just done this for a few years. So click on the link below to find out more about my real-world workshop. Between now and then, I'm going to keep you up to date with how to take advantage of our changing markets in future updates. I also want to remind you that in changing times like we're experiencing, no one can quite help you like the independent property investment strategists at Metropole. Remember, the multi-award winning team at Metropole have no properties for sale, so their advice is independent, it's unbiased. If you want to find out a bit more about what's happening in your local market and what our research suggests is in store, why don't you join us at a free briefing in Melbourne, Sydney and Brisbane, or with our associates in Perth? Just click on the link down below and reserve your place. Now, so much is happening in our property markets that I've got a blog that I update almost every day. So just click on the blog link up the top there and you can subscribe to that. Now, that's a different subscription to my regular newsletter. It gives you just a really short daily update. I look forward to bringing you my next update in 2 weeks' time.